Let's go live to Ed Boyd, our business reporter. Most economists forecasting the cash rate to rise this afternoon. There is a chance that, though, Ed, the RBA could keep rates on hold until after the federal election, but it's looking like a very slim chance.
Looking like a very slim chance, Laura, that rates will be kept on hold for another month until the election campaign is completed. Most economists across the country believe the cash rate is going up today. I can show you this first slide here, which has the big four banks and their predictions, and you can see only one of them is expecting the cash rate to stay on hold today. That's Commonwealth Bank. The other three big four banks all expect a 15 basis point rise today. That would bring the cash rate from 0.1% up to 0.25%. If we go to the next slide, you can see this interest rate big four trajectory. This is what they're all expecting, the number of cash rate rises this year. And you can see ANZ and Westpac both expect 7 rate hikes this year, bringing the cash rate to 1.5% by the end of this year. Whereas the other two banks, it's NAB is 6 rate hikes and CBA's 5 up to 1%. But no matter what happens, the cash rate is definitely going up and it is definitely getting higher. If we look at this next animated slide here, you can see the cash rate moves since the GFC. So you can see at early 2008, the cash rate was at 6%. It started to slowly fall and then moved back up again to around that 5% mark in November 2010, which is the last time the cash rate was lifted. Since then, the cash rate has been on its way down, and it's been on hold at this record low of 0.1% since December 2020. So today's decision is obviously very highly anticipated, and we're here in Martin Place bringing you all the action live, Laura.
And what impact will this have on mortgages if we see a rate increase today? I'm assuming we're looking at a quarter of a percent to start off with, if it's May.
Most likely it's a 15 basis point rise to 0.25%. So I can quickly show you what interest rates are now at the big four banks, and you can see there's fixed rates and standard variable rates on the screen there. And the mortgages range in fixed between 3% and 5%. Standard variable at the moment is between 2% and 5%. That is all going to be going up, most likely from this afternoon. So if we go to the next page, you can see the financial impact on someone with a $500,000 mortgage, which is roughly the average size of a mortgage in Australia at the moment. So if the cash rate goes to 0.25% today, that's about $39 extra in mortgage repayments per month. But if it moves up higher, which it will throughout the year, you can see the last line there. When the cash rate is at 1.5%, that's $378 extra per month for an average mortgage person. So That's a lot of extra money per month that Australians are going to have to find. We know they've saved a lot of money during the pandemic. They're going to have to start spending that money very soon on their mortgages. Obviously, when people spend more money on mortgages, they're spending less money on luxury items and other goods. That, in theory, is what reduces inflation, which is what the Reserve Bank wants to do by raising the cash rate, because we know inflation is at 5.1% headline. Underlying is at 3.7%. So inflation is much too high for the economy. It needs to come down. The way to do that is to raise the cash rate.
Yeah, sure. Okay, so we're going to see rates rise probably this afternoon to a 0.25%. It's the first rise in 10 years. But that's not going to bring down inflation straight away, is it? So what do economists predict in terms of how many rises and at what level it would take to bring down that inflation rate?
Exactly, Laura. So inflation does take a while to come down. In fact, a lot of economists believe inflation hasn't yet peaked in Australia. They think it's continuing to rise in the quarter that we're in now. So this is the second quarter of the year. So inflation is still going up. The RBA is going to need to hike rates aggressively to start bringing inflation down. It's going to take months for inflation to slowly begin to cool off. So when the cash rate's at 1.5%, which is what a bunch of economists believe it will be by December this year, I think that's when we're going to start to see inflation really start to move back down again. But it's going to take a long time for it to come down to that 2 to 3% range, which is what the Reserve Bank wants. So it's at 3.7 right now. It's going to take a long period of time to get it back down again.